In last video, we learned what are indicators and the difference between traditional and AI indicators. This video, we will cover the categories of AI indicators. So, watch the full video. It will help you a lot in trading. AI indicators do one main thing. They adapt. When market behavior changes, their calculations change too. Traditional indicators use fixed formulas. AI indicators adjust based on data patterns. That's it. No magic. AI indicators are not crystal balls. They don't tell you exactly where price will go. They help you understand context. What usually happens when conditions look like this? This sentence reduces false expectations. Very important. The first category is trend indicators. Now we are applying AI trend indicator on price chart. This is an AI-powered version of the traditional trend indicator, but instead of using fixed settings, it adapts itself using machine learning based on market behavior. You can see a colored cloud or band following the price. This band keeps changing its position and color as market conditions change. When the price stays below the red zone, the indicator is telling us the market trend is bearish. When the price moves above the green zone, it signals a bullish trend environment. The bullish and bearish signals appearing on the chart. These are trend confirmation signals, not instant buy or sell commands. Its main job is to help traders stay on the right side of the trend and avoid trading against strong momentum. In upcoming videos, we'll break this indicator down in detail, how it adapts, how to avoid false signals, and how to combine it with other AI indicators. For now, just remember, this indicator shows the current market trend. The second category is resistance and support indicators. Now on the screen, I'm applying an AI-based support and resistance indicator. This is very different from traditional support and resistance lines. So don't think of this as just one support and one resistance. Instead of drawing fixed lines, this indicator uses machine learning to analyze where price has spent the most time in the past. It groups price activity into different clusters, which represent important price zones. When you apply this AI support and resistance indicator, it is using machine learning clustering to group price reactions. You can see the three price reaction areas: green, red, and blue. Those grouped price areas are called clusters. This green zone is where buyers previously stepped in aggressively. AI sees this area as a demand cluster, not just a single support line. This red zone is where most traders get trapped. AI marks it as a high activity zone where price keeps rotating, not trending. This blue zone is where price historically struggled to move higher. AI sees this as a distribution area, not a guaranteed breakout level. The colors do not represent fixed support or resistance forever. Clusters can shift when time frame changes because market behavior changes. That's why on different time frames, the same color may appear higher or lower. On the right side, you can see percentages next to each cluster. These percentages show how much time price has spent inside each zone. A higher percentage means that zone is more important and more respected by the market. This indicator helps traders to understand where to be careful. In upcoming videos, we'll take this indicator step by step, how to trade it, how to combine it, and how to avoid false signals. Now on the screen, I have applied an AI-based momentum indicator. Unlike traditional momentum indicators like RSI or MACD, this indicator uses machine learning to study how momentum behaved in the past and adapts itself to current market conditions. This histogram below the chart represents momentum, strength, and direction. Green bars show bullish momentum, meaning buyers are in control. Red bars show bearish momentum, meaning sellers are dominating. If we look at the left side of the indicator, we can see strong green bars forming. This tells us that bullish momentum was increasing and price was able to move higher. But notice what happens next. The green bars start shrinking and red bars appear. This tells us that bullish momentum is weakening, even before price fully breaks down. Right now, the indicator is deeply red and below the baseline. This confirms that bearish momentum is strong and sellers are fully in control of the market. As long as momentum remains red, buying becomes risky. For safer longs, traders usually wait for momentum to slow down, flatten, or turn green again. Now on the screen, I've applied an AI-based volatility indicator by ChartPrime. Unlike traditional indicators like ATR or Bollinger Bands, this indicator does not draw lines on price. Instead, it uses machine learning to classify the market into different volatility regimes, meaning it tells us whether the market is calm, unstable, or highly aggressive. You can see a thin, multicolored vertical bar on the right side of the chart. This bar represents the current volatility state of the market, not price levels. Each color in this bar represents a different volatility environment. Cool colors like blue or green indicate low volatility. Warmer colors like yellow, orange, or red indicate high volatility. This means price is moving aggressively, spreads widen, and risk increases. Now on the screen, I've applied an AI risk stability indicator. This indicator is not designed to give buy or sell signals. Its main job is to identify the current market environment, also known as the market regime. At the bottom of the chart, you can see a long, multicolored horizontal bar. This bar represents how the market behavior is changing over time. Each color shows a different regime, meaning a different type of market condition. Cool or neutral colors usually indicate range-bound or low-momentum markets, where price moves sideways and trend-following strategies struggle. Stronger or warmer colors represent trending or expansion phases, where price starts moving decisively in one direction. Very intense colors usually signal high volatility or unstable conditions, where false breakouts are common. Now I have applied an AI market sentiment indicator called fear and greed. Market sentiment indicators measure emotions, not price structure. This indicator shows whether traders are currently driven by fear or greed. When the indicator moves toward fear, traders are panic selling or avoiding risk. When it moves toward greed, traders are confident and aggressively entering trades. Extreme fear often appears near market bottoms, when most traders are already out. Extreme greed often appears near market tops, when risk is ignored. This does not mean price will reverse immediately. It means risk is increasing in that direction. Sentiment indicators are not entry tools. They are risk awareness tools. When sentiment, volatility, and regime indicators all align, trades have higher probability. When they disagree, patience becomes a strategy. Now that you understand all the major AI indicator categories, in the next videos, we'll apply one AI indicator per video, step by step on TradingView. You'll learn how to apply it, how to read it, and how professional traders actually use it in real market conditions.